developing its own AI processor. So a lot of news for NVIDIA today, Brian.
Yeah, there really is. And it's something that the market clearly is surprised, Christina, because NVIDIA stock is down 9.8%.
That's also because a week and a half ago, there was a report that Jensen Huang successfully convinced President Trump to not ban these chips. And so now we know that that's not true. And it seems like the administration is not going to back down. So who else will be next? AMD said that they're taking an $800 million charge. Broadcom could be next, given their relationship with ByteDance. We could see Marvell in the mix, et cetera. So it's really weighing on the entire sector.
It really is. And that sector is arguably one of the most, if not the most important in the market. NVIDIA's at about 500 different ETFs, so that news bringing down semis, which is bringing down the market. So between NVIDIA and the Federal Reserve Chairman, you got plenty of news today, but investing is not a one-day game. So what is the longer take on protecting and growing your money? It's a scary time. Joining us now is Jim Tierney. He is CIO of U.S. Concentrated Growth at AB, and Kathy Jones, Chief Fixed Income Strategist at Charles Schwab. And love having you both on, Kathy, because I'm trying to make the point. Today's a big move. Last week we had big moves, and the week before that we had even bigger moves. Most people that are watching and your clients are thinking about 3, 5, 10, 20 years from now. What moves, if any, should they be making right now?
Oh, hi, Brian. I think the most important principles right now are the basic principles for an individual investor, and that is to stay diversified, to understand your own risk tolerance and your risk capacity, and to try to ignore the noise. So in fixed income, we typically will suggest a long-term investor who's looking for fixed income to provide income and capital preservation and diversification from stocks, stick with higher credit quality bonds for the bulk of their portfolio, and probably right now have about an intermediate term duration, 5 to 7 years, somewhere in there. That's a sweet spot. You can earn a fair amount of interest income without a lot of credit risk, without a lot of volatility and interest rate risk. And I think this is a great environment for that because there's so much up in the air, so much uncertainty, so much volatility. We're just sticking with a real basic kind of up in credit quality, intermediate term duration portfolio.
Yeah, and Jim, I kind of made a tongue-in-cheek comment the other day. I'm not sure, I'm doing this 29 years, when there was a great period of certainty. We always talk about there's so much uncertainty. Life is uncertain. So is there any certainty in investing right now?
There is not. We're going to learn a lot more in the next few weeks in terms of how companies are dealing with tariffs and what the tariffs are really going to be. There are a bunch of negotiations going on, so we'll get a little bit more certainty. But I think as an equity investor, which equities make the bulk of most people's portfolios, you have to find the opportunities. You have to be selective. And I do think there are opportunities out there right now.
Yeah, and Jim, we go back and we say, okay, is now the time to sell because the markets went up 10% off the lows. We're down 20%. We spiked back 10%. People obviously were selling into that gain up. It's not my opinion. The market is down. But again, if I'm investing for 3, 5, 10 years from now, I think, slightly lower prices now in a market that is still up 90% in 5 years. We're coming off back-to-back 20% gains. I want to go up 20% every year. It's just not possible.
No, I don't think it's possible, but it is possible to find companies that can grow double digits over the next 5 years. And if you do that and attach your clients to those kind of companies, I think you do well. Right now, with all the tariff uncertainty, you don't want to be a major importer or exporter. But if you have manufacturing around the world and you're building local for local, I think that's a phenomenal opportunity.
Yeah.
Companies like Eaton do that. Companies like Amphenol do that. Eaton is in 35 countries around the world. Amphenol is in 40 countries around the world. I think those companies are going to be much better protected. And then companies with pricing power. If the tariffs come to be in effect in some form or another, if you have pricing power, you're going to be more protected than companies that don't. Ecolab announced this morning that they are implementing 5% price increases across the board. If they can achieve those price increases, they're going to be a heck of a lot better off than a company that's going to have to eat it. And that's what we're looking for.
Yeah, the Eaton